Okay, thanks very much. I'll speak first on the nickel market generally, and Clive will zero in on the nickel sulfate market and the battery market. It's been I suppose it's been a fairly distressing period for the nickel market over the last 7 or 8 years. Nickel prices peaked in 2014 at over $20,000 a tonne. By the end of 2015, they were down below $8,000 a tonne. It's been a little bit better since then. We've seen prices recover quite strongly, although, as this chart shows, it's been pretty volatile, bouncing along the bottom over the last 3 or 4 years. It finally looks as though we've broken out of that narrow trading range that we saw from 2015, end of 2015 through to the end of last year. And the main reason why they've broken out is because of demand, and particularly demand from the stainless steel market. Batteries we can talk about in a minute. Definitively, the nickel market has moved from oversupply to structural deficit, and that is due to a combination of supply curtailments, closures, and also basically strong demand, particularly from China. It's very hard to analyse the nickel market because more than half the inventory is not reported on exchanges. It's material that's held off the market. The top red line here shows LME stocks, and they peaked at over 450,000 tonnes, and they're now getting down to around about 300,000 tonnes, and this has been a change over the last couple of years. But you can also see fairly significant non-reported stocks in China. Only a part of that is on the Shanghai Futures Exchange, as well as off-warrant stocks. There was a huge amount of stock stored off the market in places like Malaysia and Singapore, Taiwan, over the last 3 or 4 years to take advantage of cheaper warehousing. But what we now see definitively is that inventories have fallen sharply. I'll move quickly on to demand. And the first point I would like to make about demand is that batteries still doesn't really matter. It's only about 3% of the market today. Batteries is in the future. It's not really a driver of the nickel price today. What is the driver of the nickel price today is the end use that accounts for 73% of the market, which is stainless steel. And if we do look at the breakdown of end use last year, you can see stainless steel, as I said, 73% of the market. The last 2 years, global stainless steel demand has grown by over 7%. In the first quarter of this year, it grew by 8%. It's on track to grow by around about 5% this year. The long-run trend growth rate in stainless steel demand, whichever period you want to take, last 50 years, last 15 years, is around about 5.5% a year. And that's going to continue to be a significant part of the growth story in the stainless steel market. If we look at other applications, non-ferrous alloys, which is aerospace and corrosion-resistant alloys, is also growing very, very strongly at the moment. We've seen underinvestment in recent years, and I think a few other speakers today have talked about lack of investment in infrastructure, and I think that's going to continue to be a theme that helps nickel in those applications. Plating, 8% of the market. Clive is the world's specialist in plating. Certainly that's been growing also at around about 5% a year. Move down to batteries. As I said, only 3% of the market, but growing rapidly. I mean, it grew last year by maybe 25-30%. This year is going to grow by 30 to 40%. And certainly the trend growth over the next 10 years, it's anybody's guess, but certainly is going to be 30% plus. Nickel is benefiting from not just the growth in the number of electric vehicles, but the nickel intensity of cars is moving higher as well. From around about 20 kilos per vehicle at the moment, maybe up to 40 to 50 kilos by 2025 to 2030. Depends on your views on different battery technologies. I'm not going to get too involved in that today. I think the other point I'd like to make about nickel is that we have been through a bit of a supply drought, particularly for the nickel sulfides. Nickel sulfide production peaked many years ago and has been falling in recent years. all of the growth in nickel supply that has been taking place recently has been coming from laterite ores, particularly from Indonesia and the Philippines, but also from New Caledonia, Guatemala, and many other places. So if we look at the breakdown of supply growth in nickel since 2010, the green is the laterites and the orange is the sulfides. Sulfide production globally has fallen in the last 2 years and is set to fall again this year, mainly because of a big fall in production by Vale. What we see is the impact of the Indonesian ore ban. The Indonesian government banned nickel ore exports in 2014, and that certainly coincided with a period of very weak demand growth. But certainly now we see, with the relaxation of the Indonesian ore ban, with much higher nickel prices, we're seeing laterite production grow very, very strongly at the moment. And the Indonesians are increasing nickel pig iron production domestically, or I should say the Chinese in Indonesia rather than Indonesians, and they're exporting maybe 200,000 tonnes of nickel will go to China this year from Indonesia in the form of ore. So if it hadn't have been for this laterite ore, I think we would have been facing pretty large deficits at the moment. As it turns out, even with the impact of growing supply from Indonesia, we're still seeing the market having moved from significant oversupply since 2010 to significant undersupply over the last 2 years. I won't dwell too much on this, but I'll just focus on the world market balance. You can see that the market was in surplus in 2015 by over 100,000 tonnes. Went into a small deficit in 2016, but the last year and this year, we think the deficit between supply and demand is around about 150,000 tonnes. It's going to slow down over the next few years because of fairly rapid supply growth from Indonesia in particular, and also some reopenings of supply now that the price has improved. But certainly, we're now in a structural deficit between supply and demand. I think that we do see, I won't spend too much time on this chart, but I would say that, look, we saw between 2011 and 2016, or 17 actually, over 200,000 tonnes of supply shut down. Some of it permanently, some of it because of resource depletion, some of it because of the price. We now expect supply to start to, some of that supply that's been curtailed to come back into the market. Just in the last week, we've heard about a new reopening in Macedonia of a ferronickel plant. But certainly we see that as a factor that's going to come through over the next few years. And in addition to the plants I've listed there, you've obviously heard a lot of presentations today about other potential supply increases. I think the important point to note, and the final point I just want to make, is that you've heard a lot about Class 1 nickel or sulfides being suitable for the battery industry. I think that's a fairly gross simplification. Virtually all nickel could be used to make nickel sulfate for the battery industry. It's really a question of cost. You know, if we look at the total supply of nickel last year, it was about 2.3 million tonnes. Sulfides were only a third of that. That is a potential source for the battery industry, but some of that sulfide gets converted into nickel cathode, and it's 10 times longer to dissolve nickel cathode than briquettes. It's not really a suitable product. Laterites, you can process laterites either by smelting it or by treating it hydrometallurgically through high-pressure acid leach, atmospheric leach, Caron process, etc. That material is highly suitable, especially the intermediate HPAL, mixed nickel cobalt hydroxides. It's perfect material for the battery industry. Ferronickel and NPI, nickel pig iron, account for over 50% of the market. That is not economically usable for the batteries, but you could actually, as PT Vale does in Indonesia, you can actually add sulfur and make it into a nickel matte, refine it, and actually make batteries from it. But that is quite expensive. It's going to add $3,000 to $4,000 a tonne to the cost of making the NPI. And finally, oxide, which is mainly Cuba and Vale in New Caledonia. If you grind that material, that's also suitable for the battery industry. But it's not simply a question of sulfides as the only material or class 1 as the only material. It's a variety of materials. But I'll hand over now to Clive and continue the story.
Thank you, Jim. So I'd like to put emphasis on the nickel used in batteries, and in that it is nickel sulfate. So we might ask, why nickel sulfate in ISO 46H20? The long-term steady consumption of nickel sulfate is the plating industry, and that will continue to grow at possibly 5% CAGR. But the nickel sulfate that is taking off is that which is used in the battery precursor, the cathode. And as we've heard from many presentations today, not only the unit numbers of batteries, but the nickel content thereof. So the emphasis I'd like to place is upon the nickel sulfate. Where will it come from? Is there going to be tight supply or not? The feedstock, as Jim has said, is from sulfides, which have been the traditional sources, but increasingly from the laterites. New and innovative nickel sulfate facilities, I believe, will meet demand. The attraction of nickel sulfate production is that the premium on the nickel content thereof runs from about US dollars 2,500 up to today $4,000 a tonne. That's CIF Asian port. So it is very attractive to go beyond metal to the chemical itself. And that premium, of course, is over the LME base. So where might the nickel sulfate be produced, or where would the feed come from? Looking at this particular pie chart, the traditional source has been matte, and that would be typically Nornickel at Harjavalta in Finland, from which cometh a beautiful product. Crude, going clockwise, crude nickel sulfate comes from either copper refineries or from the platinum group refineries in South Africa. And that will always be there, but these are only small amounts. The most attractive source from which to make nickel sulfate, as Jim said, is nickel hydroxide, mixed nickel cobalt hydroxide precipitates from HPAL laterite. Well, not only HPAL, as Jim said, it could also be straight pressure, or it could be atmospheric leaching, but there's not enough of that around. Next, going around the grey shaded area is mixed sulfides, which mostly come these days from the Philippines, and that's Sumitomo, but most recently the restart in Finland by Terrafame, and that has got a lot of potential to increase in the next year or so. Because of that gap in supply of very attractive mixed sulfides or the hydroxide precipitate, the only way to fill that gap is with pure metal, dissolving it in sulfuric acid. And the hydromet powder or briquettes a way to do that, and that's in fact the basis which BHP will use in Kwinana in West Australia, from which to make nickel sulfate. But a lot is used in China in the absence of a cheaper source, but I think that will shrink in time. Carbonyl nickel powder is a very expensive way to do it, and in India, where there are very high duties against imported sulfate, people actually cut electrolytic cathodes. And finally, there's the recycling of batteries, which is substantial. We won't see lithium batteries come back into the system for some years yet, but that is a current source. So where can we, what if we say the most favourable resource is in fact mixed nickel cobalt hydroxide, where can it come from? At the moment there's not enough around, and the payables for that would be, at the moment contracts are running at about 75%, 79% for the nickel, and surprisingly under 70% for the cobalt content. But I see those cranking up beyond 80% for both. But it's a very attractive feedstock. The buy-in price is very attractive, and it's very simple to dissolve in sulfuric acid and make the sulfates. So what have we got? Typically, whoops, sorry. Perhaps the best operation that I'm aware of is the Ramu project, nickel cobalt, on the north coast of New Guinea, operated by MCC and part owned by the New Guinean government and Highland Pacific, who were the original explorer. This is a high pressure acid leach, and high pressure acid leach has had an unfortunate name due to many errors in the past, particularly in Australia. But this one works, and it's operating in excess of nameplate capacity at 33,000 tonnes nickel content and a 1:10 ratio of cobalt. So very attractive indeed. And then that MHP goes off to various Chinese manufacturers, and they make a very fine form of nickel sulfate and cobalt sulfate. I would actually emphasise the importance of purity when we're talking the plating market and the battery market. Both markets are electrochemical processes governed by Faraday's law. Michael Faraday is buried just over there next to Isaac Newton. And the purity of the product is absolutely imperative in terms of both metallic impurities, must be very low, but also because we're using solvent leach. Low impurities include total organic carbon, and that's not often taken into account. So the feedstock from which you produce this is the first criteria, the buy-in cost for the chemical processor, and then the process itself to produce a high-quality product. As I mentioned before, the premium currently for nickel sulfate is $2,500 for a long-term contract, up to $4,000 a tonne for spot business. And the premium on cobalt sulfate is $3,000 a tonne at the moment. That's on top of a very high cobalt price. So a lot of nickel projects will be bought on through in the laterite stream, largely supported by the cobalt content. So how to go from the ideal product as a mixed hydroxide or mixed sulfide to the final product, and here we're focusing on nickel sulfate. But I would emphasise that the processes that one should use should also fully extract every gram that you have cobalt out of it that you can. So I just quote here a typical example is a chemical plant coming up in Kwinana, West Australia, next door to BHP's, very large, 100,000 tonne a year nickel sulfate plant. But this one is unique, whereas BHP will take only the metal, the powder. This will use, is a process which can take a variety of feedstock. And going from the left is the mixed nickel cobalt hydroxide product, crude nickel sulfate from platinum and copper refineries around the world, mixed sulfides as Terrafoam, or there's the Sumitomo stream in the Philippines, nickel matte, that's the traditional method, nickel oxides with nickel powder. And nickel powder you could also use briquettes. A lot of people in China and India use nickel briquettes instead of powder because dissolution in sulfuric acid generates a lot of hydrogen, and the large surface area of the powder means you've got clouds of hydrogen and you wouldn't want to go near it with a match. So often nickel briquettes are used because they simply have a lower surface area and therefore dissolve more slowly with less generation of hydrogen. To move to another subject is the people that I talk to, and I live in Hong Kong, and it's not a bad place to be because we're in the centre of the battery industry, Japan, Korea and China above all else. And in my organisation we have dealt with nickel sulphate for several decades. And that's for the plating industry. And I would mention that the plating industry, 75% of the world's nickel plating takes place in Asia, from Japan to India. And that's actually not far off total nickel consumption. Jim is better at this than I am, but I think perhaps we could say, Jim, total nickel consumption globally would be maybe 73% in Asia or something of that order. So this is very much the centre of where nickel is consumed. In my own business, we buy nickel sulphate and nickel metal and sell to the plating industry. And we have, for the last 15 years, protected ourselves by use of the LME contracts. And in this case, it's the nickel contract. And all that one need to do is simply hedge the nickel metal content, which in sulphate is 22.3, and in cobalt it's 20.7%. And that protects you on the buy-sell side. A lot of the battery manufacturers and the whole of the supply chain with whom I talk in China, as well as Japan and Korea, are extremely concerned about the price volatility of these two major metals, nickel and cobalt, not to speak of the lithium carbonate or hydroxide. And so the management of that risk is critical to every participant in the supply chain. And it is really quite simple. There's been a lot of discussion about contracts for nickel sulphate, cobalt sulphate, which I can't see myself, nor in my recent discussions with the LME. So all you do is you hedge the nickel content and you hedge the cobalt content. Nickel contract on the LME is quite liquid, cobalt less so, but there is a cash-settled contract coming up next year. So if that protects you against risk for those two elements, it leaves you with nickel carbonate. And the LME plans to have a nickel carbonate equivalent, or it could be a hydroxide, become available early next year, I think about April. So I was with the LME a couple of days ago and they verified that plan is still in place. So how to manage risk? So one could start with the feedstock. If it's a company that is purely a chemical conversion company, then you could hedge the nickel and cobalt content of the mixed hydroxide that's coming in, or the metal that you buy. And then it can go through to the end of that chain, the nickel sulphate, cobalt sulphate. And the next operation in the supply chain is the precursor. That changes title again, another opportunity to hedge. Then to the cathodes for battery cells, and for the lithium-ion cells to the battery pack, and finally into the EV or the storage system. Nothing very difficult about this. In my own business, we supply raw materials for plating the metal and the nickel sulphate, nickel chloride, nickel sulfamate. And for companies like Panasonic making home appliances, or Toyota motor car, we hedge on their behalf the nickel content that they will use in their production lines, albeit bought from a contractor, 12 months ahead. So it enables the end user to have a fixed price and put that in their price book 12 months out. If need be, it could go out to 2 years. So finally, as we draw to a close, is there going to be enough nickel for the enormous growth that I think appears to be the general consensus in the battery area? My own opinion is yes, there will be comfortably, and that because of the availability of laterite ores, that it'll be hard to see a great uplift in the base LME price. We shall see in time. But This is again to echo what Jim said, is there enough? So here, and I do quote, this is Jim's own information, which I'm quoting, that the green area then is ferro-nickel. Sorry, Jim. Sorry. Oh, it's scrap. Beg your pardon. Thank you for that. This is, can the nickel be used, nickel that is going into stainless steel, be converted for plating? Very definitely no, not scrap. And the next one, which here is the black one, is nickel pig iron, Jim? Yeah, and ferro-nickels. So it can be converted, and indeed I've experimented in a process that you could dissolve in acid, you could extract the nickel. There is cobalt wrapped up in that. And the iron you could convert into a very highly pure magnetite, which is used for high purity iron powder. But that's not economical. So the potential for conversion sits with metal, e.g. briquettes, and that could be converted, or oxide also, Jim, is that the idea? Yep. So, but over and above that, I believe that there's going to be an enormous uplift in the use of the laterites that sit around in Indonesia. The nickel pig iron producers have taken the saprolite out, and they're sitting in heaps is the limonite, and that's what you need for conversion to a mixed hydroxide product. And the beauty of that is that it brings with it cobalt, some in the ratio of 1 of cobalt to 10 of nickel, some less so. But both the nickel is there and the cobalt's there. And the idea of high pressure acid leach, which turned a lot of people off, I think has been overcome. And I use that New Guinea demonstration as Ramu. There are now engineering companies who could do mini plants, which you wheel in at maybe $200 million. And that would get you the hydroxide. From there, it's another step to take the sulfate. But the base nickel price as it is and the premium that goes with it makes that route extremely attractive. So, in our opinion, the wheels are turning. That, you might wonder what it is. That's an aluminium wheel with a beautiful deposit of nickel and chromium on the surface, which will be as good on the day that that vehicle goes to the scrap heap as it was in the showrooms. And thank you very much.
And just while we've got you guys on stage, I just wonder if there's any questions. Yeah, we've got one down here.
Thanks, guys. That was excellent. Just a quick question on the incentive price for the nickel sulfate for these projects, particularly out of Indonesia, which seems to be the first sort of source off the block. What are we looking at for an incentive price to bring, say, 100,000 tonnes on?
Well, the incentive price is a combination of the capital cost and the operating cost. With the cobalt price going through the roof, the operating cost of an HPAL type plant is coming down, down, down. Net of cobalt byproduct credits today, you could probably be producing at $5,000, $6,000 a tonne. The capital cost of Ramu, of Sumitomo in Philippines, was around about $50,000 to $55,000 per tonne of capacity. The Chinese are talking about lowering that by 50%. So they're talking about bringing on mixed nickel hydroxide plants, and it's mainly Qingshan and Jinchuan who are doing that, at around about $30,000 to $40,000 per tonne of capacity. So when you put those two together, the incentive price is actually more like $12,000 to $15,000 a tonne, not the sort of $20,000 plus that you needed for Goro, for Ambatavi, and those sort of projects. The question is whether they can do it. You know, I think that's the issue. In Indonesia, the two issues are going to be acid. Where do they get the acid from? They'll have to build an acid plant. And secondly, disposal of tailings, which is a problem with HPAL. But, and that's been a problem with a few of these other operations. But essentially, the incentive price is not as high as previously thought.
That's great. Thank you.
Anyone further with a question for Clive or Jim? No? Fantastic. Well, look, one more here. Sorry.
How do you think the changing makeup of nickel demand will impact on price volatility over the longer term?
The price volatility in nickel in the past has been driven mainly by the stainless steel sector, because the stainless steel producers, 50% of the cost of making the stainless steel is the nickel. So, and they still have an alloy surcharge, which is based on a lagged nickel price. So whenever the nickel price goes down, the stainless steel end users destock like crazy, because they know that the price of stainless is going to go down in a few months' time. And when the nickel price goes up, they overstock. So in the past, the volatility of nickel has been driven by the pricing mechanism for stainless steel. So if now we move to a system where maybe by 2025, 2030, batteries is the main driver of nickel demand, maybe that brings a bit less of that short-term volatility to the price. But if depends how you define volatility. I mean, I think we may have volatility in an upward direction over the next 10 years. But certainly that short-term volatility has been driven by lack of liquidity on the LME and this stainless steel volatility. And maybe that will become a less important factor going forward.
Okay. Unless there's anyone else, I think we'll say one more round of applause to you guys. Thanks a lot.